Hello everyone, I am Paul. Welcome to Invest Official. Major U.S. equity averages sold off Thursday, as soft economic data reignited questions about the Federal Reserve's decision to wait longer on cutting interest rates, but Meta rose following stronger than expected Q2 results. Stock indexes veered down earlier in the day, but finished off session lows. The Nasdaq Composite dropped 2.3%, its sharpest loss since the 3.6% tumble on July 24th. The Dow fell 1.2%, losing 495 points, led by Boeing. The S&P 500 slumped 1.4%. 6 of its 11 sectors fell, paced by the 3.4% fall in the information technology sector. The CBOE Volatility Index soared 14% and hit its highest reading since mid-April. Investors started August trade with some downbeat economic updates in hand. Weekly initial jobless claims rose to 249,000, more than the 236,000 consensus, and the U.S. PMI Manufacturing Index fell into contraction territory to 49.6 in July. The reports arrived a day after the Federal Open Market Committee left its key interest rate at 5.25%, 5.5%, where it's been for a year. Policymakers said they've shifted to a more balanced view to focus on the maximum employment side of its dual mandate that includes managing inflation. Fed Chair Jerome Powell said an interest rate cut could be on the table as soon as September. Investors are now panicking that the central bank isn't trimming soon enough, and the satisfaction of Powell communicating decent odds of a September rate cut was short-lived, Jose Torres, senior economist at Interactive Brokers, said in a note. Investors snapped up U.S. government debt, pulling the 10-year Treasury yield, U.S. 10Y, down 5 basis points to 3.99%, falling below 4% for the first time since February. The 2-year yield, U.S. 2Y, fell 9 basis points to 4.17%. Meanwhile, Meta shares rose plus 4.3% after Facebook's parent company beat expectations for its Q2 top and bottom lines. Many fans have asked me whether they can buy Meta at this time. Let's analyze the Meta stock one by one. First, let's ask Amy, why does Meta rise? We see Amy mention the following points. Meta Platform's stock performance is driven by several key factors. 1. User growth and ad revenue. Daily active users increased by 7% to 3.24 billion, boosting core advertising revenue by 27% year-over-year in Q1. 2. AI integration. AI now powers 30% of Facebook feed posts and over 50% of Instagram content. Meta plans to increase 2024 capital expenditures to support its AI initiatives. 3. Efficiency. Operating margin improved from 25% to 38% in Q1. Revenue is expected to grow by 18% in Q2. 4. Investor sentiment and market position. Despite challenges, investor pessimism offers a buying opportunity. Meta's focus on the metaverse and AI positions it well for future growth. 5. Financial health. Strong financials with significant cash reserves and shareholder returns through dividends and share repurchases. The stock has risen by about 5.5% since the last earnings report. In conclusion, Meta's success is driven by user growth, cost management, AI integration, and strategic investments, leading to positive earnings and revenue despite market volatility. After analyzing the fundamentals of Meta, let's ask Amy, is it a good time to buy Meta now? We can see that Amy gives great investment advice. Now may not be the best time to buy Meta Platform stock due to several factors. 1. Recent price movement. Meta's stock closed at $497.74 on August 1, 2024, a 4.82% increase from the previous day. This single day's data doesn't indicate a sustained trend. 2. Technical indicators. MACD, 9.89, indicating a bearish trend. RSI, 40.66, showing the stock is neither overbought nor oversold. 3. Resistance and support levels. Trading just below the 50-day EMA of 488.86. Approaching resistance at $408.32 and support at $469.96, indicating potential for both upward and downward movement. 4. Analyst sentiment. Average price target, $540.35, with significant uncertainty. 5. Market sentiment. Generally positive with a bullish outlook for the next year, but not necessarily for short-term gains. 6. Company fundamentals. P/E ratio, 24.48. Dividend yield, 0.21%. In conclusion, despite Meta's positive long-term prospects, current indicators and sentiment do not strongly suggest a buy. Investors should consider their investment horizon and risk tolerance. Follow me, and you can get more valuable investment advice.